What's up, investors? Justin here. So NIO stock this morning broke $50 a share for the first time. And even though NIO stock is up over 1,200% year to date, it is not showing any signs of slowing down. And based on the continued momentum in NIO stock, yesterday I bought $1,500 worth of NIO stock for my high growth stock portfolio. So in this video, I want to first discuss my reasoning for why I decided to buy more NIO stock. And I also want to give you my bullish thesis for why I think NIO can one day hit $400 a share. And I am not the only one out there saying that this is possible. So if you have bought NIO stock or you are thinking of buying NIO stock, make sure to watch this video all the way to the end. But first, if you are new here, please consider hitting that red subscribe button. I put out videos every week on the stock market and investing, and I don't want you to miss out. Also, I have been investing successfully for over 10 years, and in that time, I have been able to grow my investments to over $500,000. So hit that subscribe button and let's get rich together. Now, first off, even though I purchased NIO stock, I want to be clear that I personally think a lot of the easy money has already been made. Like I said earlier, NIO stock has already gone up over 1,000% from its March lows earlier this year. And at that time, it was only a $5 to $6 billion market cap stock. But now that NIO is closing in on a $100 billion market cap, explosive growth will be more difficult and take longer. For NIO stock to return another 1,000%, its current share price of $50 would need to hit $500, which in turn would give NIO stock a market cap of close to $700 billion. And that is almost double the current market cap of Tesla stock right now. So even though I am bullish on NIO, I do think we have to think logically about the long-term potential returns when buying NIO stock. So with that little warning thrown in there, let's go ahead and discuss the growth factors driving NIO stock higher. NIO stock is a Chinese car manufacturer that makes electric vehicles for the Chinese markets. And the Chinese market for electric vehicles right now is booming. Now, there are a number of reasons for this, but essentially the government right now is highly incentivizing consumers to purchase EVs, and this is primarily to help fight air pollution. In addition to this, China is also the largest car market in the world, with Chinese consumers buying more vehicles each year than consumers in the US. Now, based on these facts, the Chinese government has a vested interest in trying to grow their local electric car brands moving forward, and this does make sense. Even though Tesla is one of the biggest EV manufacturers in the world right now, that doesn't mean that China wants to rely on them in the future. As we've seen with President Trump's trade wars with China, when any country relies on another country for products, that creates leverage for the country making the products. Also, Tesla is one of the only US companies in China right now that did not have to sign over any of their proprietary technology in order to operate in the country. So it will be a lot harder for China to steal Tesla's proprietary engineering and software data. Now, is it still happening? Probably. But at least Tesla is not simply handing it over to them. What this means is that in the eyes of the Chinese government, these EV manufacturers are too important to let them fail. And unlike in the US where Tesla almost went bankrupt, the Chinese government will make sure that companies like NIO will not go bankrupt. Now, typically, I am not a fan of government-run businesses, but in this case, government involvement in NIO can actually be considered a growth catalyst. That's why when NIO scrapped its plan to build a factory in Shanghai and instead contracted with state-owned manufacturer JAC, this was seen as a bullish sign. Also, when NIO hit hard times from the coronavirus earlier this year, state-owned companies jumped in to help, eventually investing $1 billion in NIO for a stake of the company. Now, NIO did have to give up a lot in order to get this money, but it has a chance to buy back all the shares it lost if it can hit specific sales targets by 2025, which NIO is already on track to hit as of this year. So even though it is generally considered risky for governments to get involved in businesses, for NIO stock right now, this is actually a good thing. Now, the next important thing to look at for NIO stock is market share. There are roughly 400 Chinese electric vehicle manufacturers across China right now, so finding EV stocks that stand out from all of the others is very important. But currently there are only 3 Chinese EV companies that are publicly traded stocks in the US, and NIO is by far the biggest based on not only market cap, but also sales numbers. The other 2 are Xpeng and LI Auto, both of which are currently hovering around around $30 billion market caps right now. Now, this next point is very crucial for investors to understand, but in order for NIO to hit $400 or even $500 per share, they need to be able to expand outside of China. Right now, sales inside of China are looking really good. NIO sold almost 5,000 cars in the month of September alone. But to put things in perspective, Tesla sold 65,000 cars globally in September, which is over 10 times more cars than NIO sold. So make no mistake, in order for NIO to experience huge growth moving forward, they need to break out of the highly competitive Chinese market and be able to sell cars globally. And just to show you how competitive the EV market is in China, we can see that newcomers Li Auto and Xpeng are already closing in on NIO in terms of sales. Despite NIO having a large lead, Li Auto managed to sell 3,500 cars in the month of September, and Xpeng sold a little over 3,400. So NIO is not very far ahead if we just go off of the raw sales data. Now, I will say that NIO has more brand recognition than either Li Auto and Xpeng, but that could change if Li Auto and Xpeng continue to post strong sales numbers. But NIO stock has a lot of momentum right now, and they could use their high stock price to do what Tesla did and raise a lot of capital that they can use to create new products. Also, something else that is good news for NIO stock is that they recently ranked at the top of a J.D. Power customer satisfaction survey for electric cars. This survey was conducted in China by J.D. Power and found that NIO had the fewest problems per 100 cars of any EV manufacturer, reporting only 109 problems per 100 cars to Tesla's 113 problems. So this is a good sign for NIO stock since their build quality is slightly better than Tesla's, or at least Chinese customers perceive NIO's build quality to be better than Tesla's. Based on this, I think that NIO has a good shot of becoming one of the dominant EV companies in China. And if they can do that, I think they can easily surpass $100 a share. But when I was thinking about making this video on NIO stock, I was very tempted to sugarcoat everything and simply talk about how great NIO stock is. But that would not be fair to you guys, and I really try hard to give my honest opinion instead of just saying things that I think you want to hear. So now that we've talked about the positives with NIO stock, I want to take a more cautious approach and try to give you a more balanced view on NIO stock. And I want to do this because my number one rule I have with my investments is to never lose money. Therefore, when evaluating stocks to buy, I always try to balance my enthusiasm for a particular stock with my risk tolerance. Now, this does not mean that I avoid buying risky stocks. I have bought very risky stocks over the past year, including Workhorse, Arrow, Hyliion, and even Lordstown Motors. Some of those purchases have worked out great for me and some have not. But with these high-risk stocks, I never put in more than 1% of my money into them. That way, if I make a mistake, then I can only lose up to 1% of my portfolio. Now, when it comes to losing money in the stock market, we all know that you don't lose anything until you sell. So if you are down 30%, for example, you don't actually lose money until you realize the loss by selling. What this means is that a stock is only risky if it has a high chance of going down and never recovering, leaving you with no choice but to sell it for a loss. So when it comes to NIO stock, my biggest question is whether or not NIO will be able to recover from any big price drops. And let's be honest, with how much NIO stock has run up over the past year, it will fall at some point. But again, this is not a problem as long as NIO is able to recover and reach new highs. So for me, the biggest question I attempted to answer when I was researching NIO stock is whether or not NIO is a pump and dump. And this is a very important point that I don't want you to miss. In my opinion, the number one biggest thing that separates good investors from bad investors is being able to correctly identify potential pump and dump situations. It is one of the best feelings in the world to see a stock that you bought continue to go up day after day. But it is also easily one of the worst feelings to see a stock plummet and your money slowly go to zero. Or with these pump and dump stocks, I should say quickly go to zero. So essentially the question I am asking here with NIO stock is what happens when the momentum runs out? Is this a stock that will lose 90+% of its value, or is this a stock that will be able to bounce back? And personally, I believe that NIO stock is one that is here to stay. I believe if the momentum runs out or if there are short sellers that try to attack the stock, that NIO will eventually rebound. around. But that being said, I only put in $1,500 because the potential downside with NIO stock is quite large. In my opinion, it is not unlikely that we could see a 30 to 50% correction before NIO stock is able to start rebounding. So for me, I only felt comfortable with putting in around 1% of my portfolio at this time. Also, since my position in NIO stock is so small, it means that I can easily double down if we do see a 30 to 50% sell-off soon. Also, I have 34 other stocks in my portfolio right now, so I am staying well diversified and I am choosing not to bet everything I have on NIO stock at the moment. But if NIO stock can continue to gain market share in China and can successfully expand into the global market, then we could see NIO stock hit $400 or even $500 a share. So if you guys enjoyed this video, make sure to hit that like button. Also, make sure to check out my channel where I have a bunch of other videos about the stock market and investing. And with that, thank you so much for watching, and I'll see you guys in the next one.